Welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into next week, what do you need to be aware of? So firstly, we have several big market moving events that traders will be watching closely. We have Wednesday's FOMC meeting minutes. Also, Federal Chair Jerome Powell will be speaking on Thursday as part of the virtual International Monetary Fund seminar. Last month, of course, Jerome Powell played down the risks of rising inflation by stating that any price acceleration will be temporary. However, the more stimulus now coming through Joe Biden's new multi-trillion-dollar spending spree, that inflation debate is now likely to be a hot talking point again going into next week. Other macro events that traders will be watching closely will include US factory orders, ISM non-manufacturing report, and also the US business activity and PPI data. Now, of course, last week, President Joe Biden unveiled his ambitious $2.3 trillion green energy and infrastructure spending plan to transform the US economy. Similar to the $1.9 trillion stimulus plan signed earlier on this month, Biden's new package will involve pumping hundreds of billions of dollars into improving the nation's aging roads, bridges, schools, railways, waterways, airports, and cellular network. One of the highlights with $174 billion investment is into electric vehicles and billions more of renewable energy initiatives, with a goal to build a national network of 500,000 electrical vehicle charging stations by 2030. Joe Biden's massive green energy and infrastructure spending plan ultimately means that the US is going to need more commodities, specifically industrial metals. Those include copper, palladium, platinum, silver, lithium, nickel, and rare earth metals for batteries. However, supply is limited, which further suggests that we could be on the verge of a super cycle in industrial metals as demand continues to outstrip supply this year. Now, when it comes to gold, any stimulus is good for gold because it ultimately leads to inflationary pressure, which is bullish for gold prices in the medium to long term. The case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, we had plenty of opportunities last week on both the metals but also the energies to keep coming in and out of these markets. So at the end of last week, on Thursday, we banked 1,200 points profit over 3 positions on the energies. That, of course, for every 1 lot that you would be trading, that's $12,000 of profit. For every 10 lots that you would be trading, that's $120,000 of profit in just 1 week. So energies here have been very lucrative to just keep coming in and out of these markets on a daily basis. Then into the close on Friday, we saw a 3% breakout after the OPEC meeting, which again, for those of you that are capitalizing, buying the dips on commodities with us last week, it was very lucrative. Now, of course, silver was another classic example where you did not want to be panic selling at the lows last week. Instead, as we discussed with you on Tuesday and Thursdays, gold and silver asset of the day, this is a gift, a buying opportunity. The sell-offs that we're seeing with the end of quarter rebalancing of portfolios, you want to look at that as an opportunity to stack at lower prices. And indeed on Thursday, metals caught a significant bid. So we saw first of all a reversal off the back of the infrastructure plans which were released by Joe Biden during his speech. And then on Thursday, as we had the first day of a new quarter, new capital coming into the market, as we discussed with you on Tuesday, to expect this, a boost higher later on in the week as you move into a new month and you move into a new quarter. By the same token, at the beginning of the week, we had contract settlement and then also the end of quarter profit taking and rebalancing of portfolios right at the end of March. So that's typically a liquidation event where the dollar picks up momentum, traders are banking their profits, shifting into cash, which makes the dollar break out, which it did to 5-month highs. But this, again, provided fantastic opportunities there to build positions in silver, in platinum, in gold, in copper, I do hope that many of you have capitalized on that like we have with our members at the Gold and Silver Club. So into the close here on Friday, we've got silver up just over 2%. So my expectation would be, as we go into next week, that silver will get well supported at these levels. What I would like to see silver do as we go into next week is make a run up back to the previous swing highs that were broken down from in the month of March here. So we want to observe whether we can pick up some further momentum here going into next week. We've already had a strong close there on Friday, so we want to first of all take out last week's highs here. Once we can start building momentum above those zones, then I would look to fill the block above, taking the price back towards the previous highs that were tested back in March here. So ultimately, silver looking very strong here into the close. Now, gold as well, very similar, strong move here over Wednesday and Thursday. Wednesday, when we had the infrastructure plans being released by Joe Biden during his speech, and then on Thursday, as we saw fresh capital coming into the market. First day of a new quarter, really strong close here, nice V-shaped reversal as well in terms of the price structure here. And again, I would look for follow through on gold as we go into next week at these zones, especially if we can then take out the previous weekly highs here and the highs from March. This is when gold can then start to get going and break out from this downward trending channel where we've continued to see lower highs from February onwards. So if we can then break and close above the recent weekly highs here and the recent swing highs, then we have a higher low. And you could also suggest we've got a double bottom here as well, where again we've retested 1,676 US dollars per ounce in the last week, found strong support there. Now if you look at the weekly chart as well, we are primed for a potential reversal from this level as well. You've got 3 taps into a very strong area of liquidity, and I would look for the potential for this to pick up momentum certainly over the month of April. As we mentioned, last week was amazing opportunity for you to stack positions between 1680 to 1700. We went through that in detail with you on Gold Asset of the Day, that was a fantastic buy opportunity for you between 1680 to 1700, and you'll see here that was within $6 of the low when we were recording that video for you and going through that big opportunity on Tuesday on Gold Asset of the Day. So again, I hope many of you have capitalized on that, because what we've seen a lot out there is many traders have panic sold right at the lows, particularly 100% technical based traders who've been looking for much lower prices here for gold, and instead we've had this very typical slingshot move higher over Wednesday and Thursday as we get into the first quarter and also the first trading day of a new month transitioning into April here. Also, copper has given us a nice close here on Friday, closing limit up on the day just under 1%. We have taken the opportunity in the last week on these dips to stack positions here on copper, so I am liking this as we go into next week and as we go into the month of April as well, particularly with all of the infrastructure spending which is coming from the USA. So we'll definitely have that on the radar. As we mentioned to you last week as well, our expectation would be that platinum would lead gold and silver. So platinum has already broken out here to 2-week highs. We have 2 positions on platinum. You will see again nice strong close here over Wednesday and Thursday in particular, breaking out the recent consolidation. Platinum has continued to lead gold and silver. It's up just over 2% into Friday's close here. So again, as we go into a new week, lots of massive opportunities here as we transition into a new quarter that you do not want to be missing out on. And we've seen it time and time again where many traders, they succumb to fear in the market. Each time there's a sell-off, they end up panic selling out of their positions using outdated technical strategies and indicators which are telling them to come out of a position. They end up selling at the low, and then by the time that we're actually at the Gold and Silver Club and then taking profit off the table and banking positions, many of these technical traders are then FOMOing in, buying right at the highs when they finally get their technical confirmation, when in fact the sentiment has often by that point turned to greed and they get trapped, and again they get chopped up. As you know, we're going through an era of exponential change, so strategies which may have worked several years ago, they are now outdated in these current conditions. The pandemic, ongoing global restrictions, lockdowns, they're the new normal. It's not going away anytime soon, and in these times of uncertainty, you've got increasing job insecurity, near to zero interest rates. The importance of having an essential skill like trading, and trading the right way, has become a necessity. You want to be utilizing a research-driven approach to the market where you are trading as the professionals are, utilizing market intelligence, data, understanding of daily, weekly, monthly, and quarterly cycles in the market. Alongside that, understanding the capital inflows that we see on a weekly, monthly, and quarterly basis will help you massively. Learning the key seasonal plays in the markets will also improve your trading, and in particular, the major news items that will be catalysts for big moves with commodities. Alongside that, understanding what the hedge funds, money managers, banks, and institutions are positioning themselves week to week in the market will also help you. Knowing key areas of liquidity, as it's just as important to know the right levels to bank your profits alongside the levels to get into trades as well. Trade management is extremely important with your positions, and of course you also want to understand macroeconomics, the intermarket correlations, and the key ratios in the market that you should learn as a commodities trader. So with that, if you would like to learn the research-driven approach to the market where you will be trading the same way as the professionals, there is an opportunity for you to do so, to join our community of successful traders and join our professional mentorship program. As a member, you get access to our exclusive live trading room webinars. You have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.